The vice president looked out at representatives from over 50 nations at the State Department and delivered a 5-word statement that will redefine the silver market forever. We will establish price floors. Not maybe, not possibly. Will. JD Vance told the world that America is guaranteeing a minimum price for critical minerals, and silver is officially on that list. Your silver, the bars in your safe, the coins in your IRA, the eagles you bought when they called you foolish. The VP just declared the U.S. government wants that metal's value to go up, not down, and his tool is adjustable tariffs. If China or any nation tries to dump cheap silver to crash the market, the U.S. will tax it to protect that price floor. This isn't speculation, this isn't a rumor. It happened today, February 4th, 2026, on camera for the world to see. By the end of this, I'll show you precisely what this means for your physical metal, for paper silver, for the short sellers, and whether $1,000 an ounce is a pipe dream or an inevitability. But first, I need to reveal what convinced me this was coming. A system so fundamentally broken its continued existence defies all logic. Welcome to the hidden economy. If you're new, smash that like button and subscribe now, because the algorithm suppresses truths like this unless you act. This is the Intel Wall Street praise you never see. If you caught my last video on the Epstein emails and 10,000 gold, what I'm about to expose about silver is the flip side of that same corrupted coin. Here are Vance's exact words, because they matter. These reference prices will operate as a floor, maintained through adjustable tariffs to uphold pricing integrity. He stated, "We want to eliminate that problem of people flooding our markets with cheap critical minerals to undercut our domestic manufacturers. Because as soon as they've undercut our makers, they leave the market and jack up the price to a completely unfair level." Read that again. The vice president just described on the global stage a strategy where the government uses tariffs as a weapon to prevent anyone from selling critical minerals below a certain price. That is a price floor, and he did not stop there. He said the United States is proposing a trading bloc among allies and partners, one that guarantees American access to American industrial might while also expanding production across the entire zone. Secretary of the Interior Doug Burgum confirmed that 30 countries have already expressed interest in joining. This is not a press release from a junior staffer. This is the number 2 official in the United States government telling 50 nations that America is building an economic alliance, specifically to control the price of the metals that run the modern world. And silver is one of them. Now, I need you to understand something critical because last week the media told you the exact opposite. On January 30th, readers reported that the Trump administration was backing away from individual company price floors. The headline made it sound like price floors were dead. Australian mining stocks dropped, silver investors panicked, and the narrative became that the whole thing was falling apart. That narrative was wrong. What died last week was one approach: individual deals with individual companies, one at a time, slow, expensive, politically messy. That approach was never going to scale. What Vance announced today is completely different. This is not a deal with one company. This is a system. Tariffs applied across an entire trading bloc. If the world price of silver drops below whatever the reference price is, a tariff automatically kicks in to bring the import price back up to the floor. No congressional funding needed. No individual negotiations. The tariff is the mechanism, and the president already has the authority to impose it under Section 232, which Trump signed on January 14th, declaring critical mineral imports a threat to national security. So the media said price floors are dead. And today a much bigger version of price floors was born. The market has not figured this out yet. When it does, what happens next could be historic. But before I get to the price targets, you need to understand why the government is doing this at all. Because the answer tells you everything about where this is going. On November 7th, 2025, the United States Geological Survey did something it has never done before. It put silver on the official critical minerals list. Silver had never been on it. Not during World War II, when the Manhattan Project borrowed 430 million ounces of silver from the national stockpile to build the atomic bomb. Not during the Cold War. Not during any crisis in American history, but it is on the list now. Same legal category as uranium. That classification unlocks federal investment, fast-track mining permits, stockpiling authority, and yes, price floors, all in the name of national security. And before I show you why, there is something I need you to hold in your mind, because I'm going to come back to it later. And when I do, it is going to reframe every number I'm about to give you. 5 government agencies, including the Department of Defense, stopped reporting how much silver the military uses. They stopped in 1996. No explanation. They just went dark. 30 years of silence. Remember that. You already know silver is being consumed. Solar panels, AI servers, electric vehicles, cruise missiles. You know demand is exploding and supply cannot keep up. You have heard those numbers. So I'm not going to repeat them. Instead, I'm going to show you the number that nobody is talking about. 820 million ounces. That is the cumulative supply deficit over the last 5 years. 5 consecutive years where the world consumed more silver than it produced. 820 million ounces short. That is the equivalent of 10 months of every silver mine on Earth running at full capacity. 10 months of global production that was consumed and never replaced. And 71% of all silver is mined as a byproduct of copper and zinc, which means higher silver prices do not produce more silver. There is no emergency button. There is no quick fix. And the people in charge just admitted it. That is why Vance made this announcement today. But there's a number behind that number that is far more dangerous, and almost nobody is paying attention to it. 356 to 1. That is the current ratio of paper silver claims to physical silver backing them. You have heard about this ratio before, but I do not think people fully understand what a price floor does to it. So let me show you. Right now, the silver futures market functions because both sides believe they can win. The longs believe the price is going up. The shorts believe they can drive it down, or at minimum roll their positions and avoid delivery. That balance is what keeps the paper market alive. But what happens to that balance when the United States government announces that it will not allow the price to fall below a certain level? Think about it. If you're short silver, your entire thesis is that the price will drop. That is how you make money. You sell high and buy back low. But if the government has just told you that it will use tariffs to prevent the price from falling below a floor, your downside as a short is now capped. Not by the market, by the United States government. Your maximum gain is the distance between the current price and the floor. But your maximum loss is unlimited because the price can still go up as far as supply, and demand will take it. That is a terrible trade. And the people running the short positions at the major banks know it. There are currently massive concentrated short positions in silver on the COMEX. Positions that have been there for years. Positions that have been used to manage and suppress the price every time it gets uncomfortable. Those positions just became dramatically more dangerous to hold because the government just told you it is going to defend the price from falling, which means the shorts are now fighting the United States government. And the last time I checked, that is not a trade you want to be on the wrong side of. If those shorts start covering, if they start buying silver to close their positions, the 356:1 ratio does not unwind slowly. It snaps and there is not enough physical silver in the vaults to absorb it. COMEX registered inventories are down 70% since 2020. The LBMA has lost roughly 40%. Shanghai is at its lowest since 2015. The silver is not there. It has been consumed, destroyed. Used up in solar panels and data centers and missile guidance systems, and it is never coming back. That is the real story behind the ratio. Not just that it is broken, but that the government just made it impossible to keep it together. And then China made it worse, much worse. On January 1st of this year, China locked the door on silver exports. New restrictions. Only 44 companies in the entire country qualified for export licenses. Hundreds of smaller refiners that have been supplying the global market for decades are now blocked. China controls 60 to 70% of the world's refined silver supply, and they just choked it. Their state media described this policy as upgrading silver from a common commodity to a strategic resource. That is the exact same language China used before it restricted rare earth exports. Same playbook, different metal. And Elon Musk posted about it. His words were, "This is not good. Silver is needed in many industrial processes." But here's what I want you to see. The 30-count country trading bloc that Vance announced today is a direct response to China's move. And the countries that are joining tell you everything. Think about where silver comes from. Mexico is the world's largest silver mining nation. Peru is second. Chile, Australia, Poland, and the United States round out the top producers. Now, think about which countries would join an American lead trading bloc with price floors. These are the countries that want higher silver prices because they are the ones mining it. Mexico, Peru, Australia. These are American allies and trading partners. If they join the bloc, which Bergam says 30 countries are already interested in, it means the majority of the world's mined silver supply would be inside a system with a guaranteed minimum price. And everyone outside the bloc, primarily China, would face tariffs. So China restricts refined silver exports to the world. And America responds by building a trading bloc that locks up the raw mining supply and puts tariffs on anything China tries to sell. That is not a trade war. That is a siege. Both sides are trying to control the silver supply chain, and neither side is backing down. On February 2nd, 2 days before Vance's announcement, the White House launched Project Vault. And this deserves your full attention because nobody is giving it the analysis it warrants. Project Vault is a $12 billion critical mineral stockpile. $10 billion from the Export-Import Bank, the largest single loan in the bank's history, 15-year term 1. $67 billion in private capital that was oversubscribed, meaning more companies wanted in than there was room for. The participants include General Motors, Boeing, Stellantis, Corning, GE Vernova, and Google. The commodity trading firms Hartree Partners, Traxys, and Mercuria are handling the physical logistics. Ask yourself why Google is in a critical mineral stockpile. Google does not build cars. Google does not build missiles. Google builds data centers. And every AI server in those data centers uses 3 times more silver than a traditional server. Google is not investing in Project Vault because it cares about mining. It is investing because it is terrified of not having enough silver to build the AI infrastructure it needs. When the biggest technology company on the planet starts stockpiling industrial metals alongside defense contractors, that tells you something the stock market has not priced in yet. And the structure of Project Vault matters. The manufacturers in the program get guaranteed access to critical minerals at set prices. Read that again. Set prices. That is a price floor embedded inside a government-backed stockpile. This is not a futures contract. This is not a paper promise. This is the United States government buying physical metal, storing it, and guaranteeing American companies can access it at a fixed cost. If the market price spikes, they are protected. If China cuts supply, they are protected. This is economic warfare infrastructure, and it was built in weeks. Look at what silver has done in the last 12 months and tell me the market is overreacting. Silver went from 31 in January 2025 to an all-time high of 120 in January 2026. Then it crashed 27% in a single day on January 31st, the worst session since the Hunt brothers in 1980. And within 4 days it bounced back to 90. It is sitting at 90 as I record this, a 19% return in 12 months, even after the worst crash in 46 years. Ask yourself, what kind of asset does that? What kind of asset gets cut in half and stands back up in 4 days? An asset the world cannot function without. The biggest banks are at war over what happens next. Citigroup says 150 within 3 months. Goldman Sachs says 85 to 100 is the 2026 average. On the other side, JP Morgan's Kolonovich calls it a speculative mania and targets 50. Bank of America ranked silver #1 for bubble, like dynamics, ahead of every stock, every crypto, every commodity on earth. I'm going to tell you what I honestly think. Both sides are partially right. The speculative frenzy that took silver to 120 was real. That crash proved leverage can kill you. And anyone who says silver only goes up is lying to your face. But the deficit is real. The China restrictions are real. The critical mineral designation is real. And the price floor announced 3 hours ago is real. Those are not speculative. Those are policy, and policy does not crash 27% in a day. So hundreds and thousands silver, the number in the title. I owe you honesty, not hype. Silver is at 90, 1,000 would be 11 times higher. The gold to silver ratio at that price would be 51. That has never existed in modern history. So I am not going to sit here and tell you $1,000 silver is coming next week. That would be a lie. But 12 months ago, silver was at 31. If I told you then that it would hit 120, you would have closed this video. You would have said that is insane. If someone had told you the government would put silver on the critical minerals list, create a 12 billion stockpile and announce tariff-enforced price floors, you would have said that person was delusional. It happened. All of it in 12 months. So I do not ask if 1,000 silver is crazy. I ask what would it take? Gold at 10,000, which Yardeni Research is already projecting, with the ratio at 10 to 1, which is still wider than the historical average or currency, to basement event, which is exactly what central bank gold buying at this pace is pricing in. The 1980 silver peak of 50 adjusted for real inflation is somewhere between 150 and hundreds 400 today, depending on whose numbers you use. That is Ted Butler's analysis. At 90, silver is still historically cheap relative to how much money has been printed. 100 is not a 2026 event. But this decade, if gold hits 10,000 and the deficit deepens and the ratio compresses, 300 to 500 becomes a very real conversation. And from there, the gap to 1,000 shrinks fast. But here is what matters more than any price target. And this is the part that almost nobody is talking about. A price floor changes the fundamental nature of an investment. Think about what silver was before today. Unlimited downside. China could flood the market. Speculators could short it into the ground. A hawkish Fed appointment could crash at 30% in an afternoon. You felt it last week. Think about what silver became today. The government intends to put a floor under this metal. Price drops too low. Tariffs kick in. China dumps supply. The bloc absorbs the shock. A mine cannot turn a profit. The government guarantees a minimum. This does not eliminate volatility. It does not prevent crashes like January 31st, but it creates a structural backstop that has never existed for silver. Never. Not once in the entire history of this metal. Your downside is being limited by the most powerful government on Earth. Your upside is being driven by physics, by the fact that solar panels need silver, AI needs silver, electric vehicles need silver, missiles need silver, and nobody on this planet has figured out how to replace it. Your downside is policy, your upside is physics. That is the most favorable setup silver has ever had. And now I need to come back to the thing I told you to remember. In 1996, 5 United States government agencies, including the Department of Defense, stopped reporting how much silver the military consumes. 1 year, they reported the numbers. The next year, silence. And that silence has lasted 30 years. The Silver Institute does not include military applications in its annual supply and demand reports. Not missiles, not satellites, not radar, not naval electronics, not guidance systems, none of it. The most detailed silver accounting on the planet has a hole in it the size of the entire United States military. The 820 million ounce deficit I showed you. That number does not include a single ounce consumed by the largest military on Earth. And here is why that should terrify you. The United States has launched over 300 Tomahawk cruise missiles since 1991. Each one contains silver in its guidance systems, batteries, and electronics. Estimates range from 15 to 500 ounces per missile. Every single ounce was destroyed on impact, never recovered, never counted in the deficit. And Tomahawks are just one weapon system. Think about the entire U.S. Navy. Every Aegis destroyer, every submarine, every F-35, silver in the radar, silver in the electronics, silver in the communication systems. None of it is counted. The real deficit could be dramatically larger than 820 million ounces. And the government that classified the data is the same government that just told you silver is critical to national security. They know the real number. They are not sharing it. And they just announced price floors. Draw your own conclusions. So where does this leave us? Fact: 5 consecutive years of supply deficit, 820 million ounces short on paper. And that is only what they are willing to show us. Fact: China controls 60 to 70% of refined supply and locked the door 5 weeks ago. Fact: silver was designated a critical mineral for the first time in history. Fact: Section 232, national security threat. Fact: Project Vault 12 billion. Google, Boeing, GM. All stockpiling. Fact: 3 hours ago, Vance announced tariff and forced price floors to 50 nations. Fact: the short sellers on comics are now fighting the United States government. And fact: nobody knows how much silver the military has actually consumed because they stopped reporting it 30 years ago. These are not opinions. These are documented events. Every single one points in the same direction. Is 4,000 silver guaranteed? No. Is it mathematically possible? Yes. Is the direction clear? In my opinion, it has never been clearer in my lifetime. The United States government does not build 12 billion stockpiles for metals it thinks are going down. It does not assemble trading blocks for commodities it thinks are overpriced. It does not designate metals as critical to national security because they are in surplus. They are telling you right now today on camera in front of the world. The question is whether you're listening. I want to speak directly to the skeptics. You're going to show up in the comments. You're going to say this is hype. Silver is a bubble. JP Morgan is right. You might be right about the short term. Silver crashed 27% in a single day last week. It can happen again. If you're leveraged, you can get wiped out. I'm not here to tell you to mortgage your house and buy silver. That would be irresponsible, and I will never do it. But answer one question for me. If silver is just hype, why is the United States government building a 12 billion stockpile of it? If it is a bubble, why did the vice president announce price floors in front of 50 countries today? If it is overpriced, why is China restricting exports like it did with rare earths? And if it is a mania, why are Google and Boeing and General Motors racing to lock up supply? Bubbles do not get national security designations. Bubbles do not get price floors. Bubbles do not trigger 12 billion stockpiles with 15-year terms. Whatever silver is right now, it is not a bubble. It is a battlefield. And the two most powerful countries on Earth just told you what they think it is worth fighting over. In my next video, I'm going to break down the exact price floor levels being discussed behind closed doors. Vance said reference prices, but did not give specific numbers. I have been tracking the deals the administration has already made. The MP Materials contract, the USA Rare Earth investment. The numbers in those deals tell you a lot about where the silver floor will land. When you see them, it will change how you think about every ounce you own. Subscribe so you do not miss it. Drop a comment. What do you think the price floor for silver should be? 100, 200 more? I read every single comment. And share this 3 hours old. Breaking news. Most people have no idea this happened yet. By the time the mainstream financial channels cover it, the market will have already moved. I will see you in the next